Here we have a market review. Today was September 10th, 2024. So let's just get straight into it. We had no red folder news today at all, and we had no red folder news yesterday, and we have CPI tomorrow. So therefore, not expecting to see too much, but although there still is probably going to be some opportunity. I thought the opportunity there was definitely there today. And as you see, this is the daily chart. So this is the daily candle. We had an open, low, high, close protocol, and it looks like at this moment that we could be trading back up in this volume imbalance here, maybe constant approach to this wick right there, and we also have this daily BISI right there. So that's a key level. We actually traded up into its consequent encroachment of that intraday, and I'm not really holding too strong of a bias here. Tomorrow we have CPI, so I want to see what that does. So here is a 15-minute chart. This is NQ. These levels are daily volume imbalances. So as we see, we trade lower. We have sell stops. We're accumulating sell side liquidity, and then we're trading back up to previous day high, and also this old high right here. This old daily low. Old daily low. That's on the chart right there. That's Thursday's daily low right there. As you see, we trade into it, and we trade to it perfectly right there, and then we distribute lower for daily range. We trade into a discount. Smart money is distributing their short positions, and then they're accumulating more long positions, as seen with this SMT. SMT below true day open. We then trade higher, and then we fulfill, and we trade to these equal highs here. So we had consolidation early AM. Why was that? We just had expansion before 9:30, so we were within expansion. We're more likely to consolidate to then have a move lower or move higher. So just because we've had this expansion, we've fulfilled buy side liquidity here. We are in a premium. There is not much that 930 is really going to do. It's not going to do anything special. It's going to do what it's coded to do. And what is it coded to do here? It's coded to consolidate. So therefore, 1050 macro might be better opportunity, and going in a lunch hour could be better opportunity. As we see, that's what we had here. We consolidated until lunch. Lunch, we had a sell program, and then we wrote that back up for a buy program, and we took buy side liquidity, and then we closed the day. We had a new day opening gap that we traded into, and then we also had a new week opening gap. So let's put a little bit more annotations. This is just the 15-minute chart, and these are all my pertinent annotations. This true day opening price is what I always like to look at true day. Are we in a premium, or are we in a discount? Are we above true day, or are we below true day? Anytime that we form a significant SMT, that is likely smart money accumulating or distributing their largest positions of the day. And as we see here, here we kind of have a small SMT. Here we have that larger SMT. And although I don't come to the market just to look for straight SMT, but it's just a confirmation technique that is useful when looking at and seeing where smart money is actually accumulating their positions. And here we have SMT right at that new week opening gap. We trade out of that by one tick, but that's just beautiful delivery. We have a SIST on the 15-minute, and then we trade back higher up to buy side liquidity, up into a new week opening gap, and then look at where we close the day. New day opening gap. The new week opening gap. Sorry, the green ones are new week opening gaps. The white ones or gray ones, whatever you want to call that, that is the new day opening gap. And look at the respect to that new day opening gap, and then we're trading back into that. It closed, and we're closing off the high there, trading back with a new week opening gap. This is very nice price delivery here. As you see, we have a market maker buy model. We're going lower to then go higher. Here is 15-minute annotations of the overnight Asia session. As we see here, we open, we trade into a discount, and then we trade back up into that gap. That gap is fair value during that 7 to 8 hour, or really until 9. And then what do we see? We displace lower into this daily volume balance that gets used. We also have a new day opening gap right there. Then we trade back up into this CIBI. Then we trade lower, new day opening gap again. And then we kind of engineer some lows. We trade back up into this rejection block right there. We trade back up into a premium, and then we're trading lower into a discount. We see an SMT here, and then we see a balanced price frame that gets formed on the 15-minute time frame. Then we trade higher into the previous day high, and then also into that old high, and then into that new week opening gap. And as you see, we have an order block on the 15-minute. Volume balance is supporting price. We're trading to the low end of this rejection block right there, and then displacement higher. Very nice delivery here, like very nice. I've been paying attention to the 15-minute time frame, because that 15-minute time frame is not gonna lie to you. It's never gonna lie to you. It's never going to be back in, like, oh, we're doing this. What is the order flow on that 15-minute chart? if it is lying to you, then we're into seek and destroy. Simple. Here is the 5 minute chart, and this is Asia. I actually do like Asia. I've been studying and backtesting Asia, and Asia has certain characteristics. From 6 to 7, we're just creating viewing range, and then from 7 to really 8, we're going back to fair value. Fair value is new day opening gap. We trade back into that order block right there as well. Buy side liquidity taken, and then what is this? 2022 model. Buy side taken, shift to market structure, imbalance, institutional order flow entry drill right there. And like this is just beautiful delivery. Like I don't know what else to say. Like this is just beautiful. Order block right there. That is the new day. Like perfect, perfect. And acts as a magnet. And then we trade lower, shift to market structure, institutional order flow entry drill. Where are we trading to? Daily volume bounce. Where are we permitted to go? Where's price permitted to go? New day opening gap. And then after we trade into that level, what do? We consolidate, and what do? We retrace back into where? The 5 minute SIBI. Look at the bodies right there. Look at the bodies. Where the Mohawks able to trade? Well, we have this balanced price range here with the wicks. I didn't want to extend it because I didn't want to have all that cluster there. And what do we have here? Buy side taken, shift to market structure. Where are we retracing to? That order block, fair value. Sell side imbalance. Then we're trading back lower to these equal lows. Where as well? New day opening gap. Look at the bodies at the daily volume balance right there. Very nice, very nice. And here's the 1 minute chart of the Asia session. Overall, I think it looks better. It looks cleaner on the 5 minute. But here we have, we're trading back into buy side, trading that busy. This could possibly be a trade here off this volume balance. Asia trades are they're, from what I've noticed, they're not really textbook in terms of retracement expansion. It's kind of just a one straight move. That's kind of what we get here. Like normally we might want to see this fair value gap be traded into, but in Asia we just get that straight move higher, and then we're trading into that. And here's that breakdown, volume balance right there. That's really the only 1 minute chart annotations. Here there really was no clean entry. Well, we have an order block right there, also institutional order flow entry drill, so that could be something. And here is the back half of that. We have a stop on here. And then that's that 5 minute chart that we're going over. Volume balance gets traded into. True day starts here. And then we trade lower. Sell side imbalance. And then here is the business on the 5 minute chart during London. London, like this is very nice delivery. When we're going to go into and just see the macros, is how well these macros delivered during London. But London, 2 to 5. What do we have here? Sell side taken. We have constant approach with this wick that we are respecting. We're respecting that here. We have order block. It's also immediate rebalance there. Trade higher up to where rejection block. And this, as we're trading to a rejection block, normally I wouldn't look for a rejection block to be a PD array for us to reverse off of. But in this case, we do have to check ES. ES was traded into a new day opening gap at the same time that we're trading to this rejection block. So therefore, this can be a valid reversal because of ES. And that's what we have here. We trade lower, SIBI, boom. Aggressive movement lower, sell side taken, low end of that new week opening gap. And then what do we form here? We form a very small SMT, but that's enough. Below true day, we're also in a discount. We just took sell side. What are we waiting for? We're waiting for a possible reversal. What do we get? Reversal. Balanced price range forms. Another balanced price range forms. Look at that delivery right to that. Low end of that. Boom. That's how you want to see balanced price range be respected. We trade higher, that low end of that. Order block from the 15 minute. Look at the bodies. Trading higher, institutional order flow entry drill, and then we're just straight up to that high there. As you see, like there's a lot here, and we're not even into the New York session. We're not even into the New York session. So here we have the first London macro here, 150 to 210, and just look at these macros. There are specific times that the algo is going to spool towards liquidity or inefficiency. Here we're trading to this low, and then we're also creating this key imbalance right here. And what do? We're generating, and then where do we engage that? 250 macro. Beautiful. Beautiful. We're still respecting constant approach from that 5 minute wick there. And like look at that delivery right there. Then we trade higher, institutional order flow entry drill. There's the order block and the immediate rebalance. Low end of volume balance. Volume balance right there. Now we're trading higher up into constant approach for that wick. And then where are we delivering this? Right at that 350 macro. We have constant approach for that 5 minute wick. As you see that's that. Also constant approach for that wick. Trading lower. Trading back up into that order block right here. trading lower. Volume balance doesn't get traded into. It gets left as a breakaway. Breakaway volume balance again. Heavy price action here. Notice how we left one breakaway and another breakaway. That is what leads to this. 5-minute SIBI. We're not trading into the upper portion of that. That's institutional order flow. Notice here. Boom. Order block. Trade to sell side imbalance right there. During when 450 macro. Like it's beautiful. And here's that business. I'm not gonna go over that too much, but we're trading below true day. And then here we have that imbalance right there. I don't know if we traded into that. We might. Honestly doesn't look like we do, but we might have traded into that. I don't think we did. And here is the New York session, which is really what we care about here. So we have New York. We just expanded. We just have taken buy side, and we are in a deep premium. We're not a deep premium, but we have an opening range gap low. So we are in a premium market. We have just expanded. So therefore, I'm not really looking for much during the 950 macro, or sorry, the first 30 minutes, and that just is why we had this choppy delivery here. Looking at this while I was watching this live, I was a little bit caught off guard. I mean, I wasn't like live trading, of course, but I was just looking at it, and then I actually did a tape reading session here, kind of going over this, and like this is price action that might be a little bit difficult, might be a little bit frustrating, might cause FOMO, might cause fear, might cause greed, might cause you to do certain things that you wouldn't want to do normally. And just notice that we've had expansion before 930, so 930 is less likely to do anything. So therefore, just wait. There's always gonna be more opportunity, and I do this a lot, but like I think that I missed out on the opportunity for the day when there's always opportunity. There's always opportunity, and that's just what plagues me as a trader. Not plagues me as a trader, but what I want to work at to improve on is just the knowing that there's always opportunity, always. Like even here, like maybe I might get upset that I didn't catch this move or something. I didn't see this move. Like there's a move here, and if not, there's always tomorrow. Like every trading day does not need to be a trading day, period. And here we have, what is this, SMT during the 950 macro. Notice how the 950 macro kind of consolidate. And here, 930 open, SMT trade higher into that new week opening gap. And then we break the lower. I'll go over that in the 15-second time frame. We're trading back into opening range, constant encroachment, also into new day opening gap. New day opening gap. We trade higher. And this is really nothing. We're trading SMT. And what do we see? What is this? This is within like the first lecture. The inversion level is going to be the key level. We have that, and then we're trading up into that inversion level, and we're going down. We're trading down to this sell side right there. We also have this inversion level, and this. I know I'm bringing up inversion levels, but they're key. This is mean threshold of this order block here using the bodies. Look at that, beautiful. Look at the bodies. Look at the bodies respecting that. Look at the wicks, mohawks. Then we're trading lower, taking sell side, and then we're coming back up to a buy model to take this high here to then have a move lower. We're not gonna have a nice price run unless there is a stop on it. And here we barely purged that high, which I want to see a more meaningful purge. This is like a shallow raid or soft purge on that high, and then we trade lower during that lunch macro. Who's been profitable? Long positions right here. Their stops are gonna be right there. And as you can see, there's that 9.5 low that we traded right to perfectly as well to bring that up. And here is lunch hour. We're trading up, buy side taken, shift of market structure, imbalance, balanced price ranges. This is all sufficiently balanced. We're trading lower. SIBI, balanced price range again. I trade lower. SIBI, institutional or financial, sell side, volume balance, and that we're below true day. What do we form? S&T at a key level at a new week opening gap. That's beautiful. We have a rejection block on the 1 minute. We're trading higher. Breakaway gap. Volume balance gets traded to propulsion block on the 5 minute, and we're trading higher. So very, very nice delivery here. Here we have a lunch market maker buy model. So notice how AM session we consolidated. Lunch hour we had meaningful price action. We had very large ranges delivered during the lunch hour, which usually doesn't happen. So was that likely going to infer? PM session likely isn't going to be as clean. End of day macro probably isn't going to be as clean. There's likely not going to be favorable price runs. So here's what we have. We're going lower to then go higher. Order block. and we're trading higher. We're just splicing above that new day opening gap here, and we're trading back lower into the previous day high. We have a 5-minute BISI constant approaching as well. We're trading lower, boom, displacement, and then we're trading to those equal highs here. This is kind of a fast run here. There wasn't really like this is just fast, not the cleanest for like looking for too many entries. Just looking at that, and here we have the final. Here we have PM session. We have the BISI that we're trading within. We're trading higher, new day opening gap. We're capping the daily range at a new day opening gap. We're trading higher. Look at the bodies, Mohawk. We're trading lower to that new week opening gap right there. That's a green box right there. That's just beautiful. Just beautiful. And then I don't think I'm just denoting the new day opening gap. Oh, also this inversion level right there. That's what we trade into. Another inversion level. I'm just bringing up inversion level, inversion level, inversion level. Here is the 15-second chart. This is right after 9:30. We're trading up to that new week opening gap. What do we form here? Balanced price range. The fact that we have fair value gap in, fair value gap out, we're likely not going to head back up again. We still can, but this is kind of just a tape read. This isn't a model that I would try to implement. I think this is a little kind of unnecessary, but here we have order block that we're trading to. This Sibi right there, where the Mohawks, right there, perfect delivery right there. Also, we have an old low right there. We're trading back lower to open your range, constant approaching. That in itself, that could be a nice model, but although I don't really love that delivery. New day opening gap, new day opening gap, trade higher, consolidation, consolidation, consolidation. Not prone for much. And here is a market maker sell model. Here we're trading back up in the inversion, 1 minute, trading lower risk entry, first stage, second stage. Very nice delivery here. And look at these dealing range levels. Here we have the 25%. That's what we expect to see our low risk entry. But here we actually have the first stage. Low risk entry actually forms up here. And then we have that second stage of redistribution. It's beautiful. It's beautiful. Sell side imbalance right there. And that's all I really want to note here. Sell side taken right there. I was streaming this, so I have a tape reading recording. So if you want to see some annotations during that, or if you want to see that happen live, feel free to watch that. If not, it's cool. Here we have that inversion level here, order block. Extend that out. Boom. Down close candles. Boom. BISI here after respecting new day opening gap. Okay, the fact that we came down, we're respecting this new day opening gap, that is telling that we are in a buy program. BISI, trading higher. Down close candle, down close candle, down close candle, trading higher. Buy side taken, and here we have failure swing here. Trade lower, Sibi 1 minute, trade lower, order block. Boom. There's that. And yeah, those are all my annotations that I had throughout the day. Hope you all have a good rest of your day, and I will see you all tomorrow for another market review and also a case study. So have a good one, y'all.